Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
Post-Halloween, pre-tax season, so the scary season, has officially just begun for me. It seems to get earlier and earlier every year. I have gained some new clients, and I'm getting ready to walk away from those clients, causing me stress and creating somewhat scary times. So time goes on, and so does bookkeeping and cleanup jobs. A Facebook forum has been recently talking about several cleanup jobs that bookkeepers have started, and I recently picked up another one, inheriting a cleanup job that includes two companies, both with the same owner, and I'm now also working on a client who has been in the queue for a while since I recently finally finished a very large project. In this episode, I'll be talking about the new client, recommended by a current client, and the client, at least so far, is a model client for me. I'm pre-tax seasoned Paul Rosenblum. However, before I begin, please remember to drop me a voicemail or email with any ideas that you have about episodes that would help you as a business owner or a bookkeeper or a soon-to-be bookkeeper. I love having a dialogue with so many listeners of this podcast. Aren't you tired of my voice yet? When I finally get to the point of semi-retiring or pre-retiring, I want to do cleanup after cleanup, and maybe not even take over the bookkeeping after the initial cleanup is finished. I love doing cleanups, even if I have to go back through years of data and re-reconcile and make things right. There is a beginning, a middle, and an end to all the cleanups, unlike bookkeeping, when the clock resets every month when new bank and credit card statements come out. Cleanups are fun. I think I'm going to have a t-shirt made up that says just that, with a small picture of a general ledger and lots of floating numbers going through a funnel and coming out all in perfect order. Now, let me tell you the story about my latest cleanup client. First of all, I did not accept the client until I was able to log into their books and go through what was there. I ran a balance sheet, saved it as a PDF file, and then made notes that I can send to the client as to what was needed to be cleaned up. I did the same with the profit and loss. Nothing out of the ordinary for a client who wanted to do it themselves, but had no training in bookkeeping or taxes. It was a good, logical effort. Incorrect, but I liked the effort. I talked to the client, and they were clear that they knew the books needed work and wanted me to do whatever was needed. I looked at their net profit and knew that they could back up that thought by being able to pay me. So we had a great conversation, then a Zoom call, and we were off and running. This is what I saw when going through their books. Number one, every bank account, business and personal, were in the books as bank accounts, which are assets in accounting. I fixed this by relabeling all of the accounts very clearly and then creating journal entries in bank accounts that were closed to zero them out and then move them to equity accounts where they belong. For those who don't know what journal entries are, it's an after-the-fact adjustment to the books by using debits and credits without touching the original transactions. It's adjusting value between accounts. Number two, there were bank accounts for two different LLCs which were loosely connected, but I was able to figure it out since they mentioned that there were two LLCs and each had a different tax ID number. I fixed this again by relabeling all of the accounts and slowly figuring out which account belonged to which LLC. Number 3, personal credit cards and business credit cards were all entered, even though the personal credit cards, and bank accounts for that matter, were strictly personal and not being used for business expenses at all. I fixed this again by moving the personal credit cards to equity accounts since they were paid for by the business, even though all of the expenses were personal. Number 4, when I went to the banking section, none of the balances matched up to what the bank and credit card said the balances were, so I knew there was a problem. When I went to see which accounts were reconciled, to my surprise, no accounts were reconciled all the way back to the pre-COVID era. When I receive the bank statements, I will go back and reconcile every month, starting from the beginning, and then fix the double entries by making journal entries and creating a prior year's adjustments equity account. Number 5, personal IRS and state tax payments were in the profit and loss, not where they belong on the balance sheet. Easy fix. Just edit and change the expense account to an equity account as a sub-account of draw or personal expenses. Number 6, transfers between accounts were in an uncategorized asset account on the balance sheet from years ago. Even though this does not affect the profit and loss, it should be corrected. When I reconcile all of these accounts, I'll find those transfers and move them as I run into them on statements. Number 7, double entry credit card payments were made, which was one reason why the balances were off. I'll fix them at the end by just reversing each transaction if they were double entries, or if they were manually entered and entries made that never really happened, then I'll probably just get them out of the bank account and move them to a draw account, at least for now. And in some cases, I might delete those transactions if they didn't affect the profit and loss. Number 8, none of the fixed assets on the books were shown to be depreciated. I have to check the prior tax returns for the last 7 years to see if they actually were. This is going to be tricky. The tax return itself won't break down which assets were depreciated. I will try and get work papers from the tax preparer or printouts from the tax software that they're using to show the annual depreciation on the items. If I can't get those, I'll try and match up the best I can. The client said that they were told that everything as of the end of 2024 was depreciated. Do I believe that? Probably not, especially since the tax preparer has been very difficult to reach for the past several months. Number 9, the companies are both on a cash basis. However, I saw an allowance for bad debt on the balance sheet. This is strictly an accrual account. Again, an easy fix. I'll just zero that out with a journal entry. I'll have to look at the entry carefully, and that will let me know how to reverse it. Number 10, there was a crypto investment through the company. If you want to do that, do it personally, not through the LLC or an S Corp. I'll talk to the client about that and see if they can change the name that the crypto is under. If not, I'll just leave it there for now. Number 11, there were closed bank accounts and credit card accounts with hefty balances showing. One showed a large negative balance. Journal entries are great for these kinds of adjustments as well. We can zero out the closed bank accounts and adjust the credit cards to the correct balances as of the end of 2024, and then we'll move into 2025. Number 12, there was a loan from a family member in the books, but in reality, after questioning the client, it wasn't a loan, it was a gift. This would be adjusted from a loan, which is a liability account on the balance sheet, to additional capital with the subaccount of gift from family in the equity section. Number 13, the Small Business Administration's EIDL loan, or EIDL, back in 2020 that started to be paid back in 2021 showed all the payments going toward the principal and didn't show any interest in the books. I have to check the tax returns to see if the tax preparer picked that up or not. It's important since the interest is tax deductible and should show up on the profit and loss and not on the balance sheet like it was. I received the SBA monthly statements 20 minutes after I asked the client for them and corrected 3 years of payments. The balances are now exactly right in the books. Number 14, there were distribution accounts even though the companies are single member LLCs. Easy fix. Just change the account to a draw account. And that's just the balance sheet. You taking notes yet? Coffee break or my patented Reese's peanut butter cup break. Before we move on to the profit and loss and an ending that hopefully will make you smile, let's take a short break. And now for today's tax tip. The 2026 estimated tax due dates are as follows. The first quarter, April 15, 2026. Second quarter, June 15, 2026. Third quarter, September 15, 2026. And the fourth quarter, January 15, 2027. Write these down and pay what you can so that on the day that your taxes are filed, you won't have to shell out more than you'd like to. Now, do you want to hear about the profit and loss report and what I found? I assume you all said yes or sure thing, Paul, or at least nodded your heads. Okay, here we go. Let's move on to the profit and loss. I ran the profit and loss, exported it to a PDF file. I could have exported it to Excel, but I like PDF files and making comments there, and started to go through it. The following is what I found. Number 1, I didn't like the labels of the revenue section. Just a personal preference, but if I didn't understand exactly what the categories were, then that's not a good thing. Easy to correct. I edited and renamed the accounts in the revenue section. Number 2, the cost of goods section had equipment and other things that they purchased for jobs, but it was very unclear to me if what was left over and unused was left at a job or went back with them to be used again for another job. Two different things in accounting. I asked the client about this. They told me that what equipment they purchased for a job and didn't use, they kept and likely rented them out to other companies for their jobs. So they have a rental business as well, all part of their main LLC. This should and has been separated in the revenue section. Number 3, again, a preference of mine, but the miscellaneous account asked my accountant was a regular expense account rather than an other expense. Easy fix, just edited the account and changed it. Number 4, no company car, but all car expenses were in as regular expenses. A personal car should be in other expenses so the deduction can be taken off using a formula by the tax preparer. I had to totally reorganize the other expense section. Today, it looks great and is accurate. Number 5, health insurance for the owner should be an other expense, but was put in the books under insurance as a regular company deduction. Any single member LLC, the health insurance for the owner should be what we call under the line, meaning under the net profit, or in other words, other expenses. These now are. Number 6, One company has a studio, the other company takes a home office deduction, which would include a percentage of home rent, utilities, internet, and other things. These were showing up as other expenses, but not in a very organized way. The studio rent and utilities are regular expenses of the LLC. Number 7, there were some accounts in capital letters, some were in the proper punctuation. Makes me crazy, but you probably know that already. I fixed that easily. The chart of accounts and reports have now been cleaned up. I sent the client the before and after picture of the chart of accounts and the 2 reports. They were, needless to say, very happy and excited to move forward. When I asked them for every SBA statement from when they started repaying that loan, it took roughly 20 minutes to receive them. Amazing. So many of my clients, I'd have to wait a week. I am, however, at the writing of this episode, still waiting on all the bank statements and credit card statements, but I have no doubt that I will receive them very soon. I know that they had jobs last week and were out of the studio for several days. These are the kinds of clients who I love to work with. They get what I'm trying to do, and they appreciate it. And sometimes in New York City, that's a tough one to find. When I get the tax returns, I will have to try and create a balance sheet to reflect the tax returns, and that is going to be the slow part of this cleanup. But it's well worth the effort. Going to start breaking out the white shirts again and dressing the part of a bookkeeper and saving the shorts and t-shirts for next summer. It's getting busy. Pre-tax season is here. Is that kind of like a pre-wash for the laundry? Pre-nuptials? Pre-approval? Pre-conditioning? Well, I'm preoccupied with the beginning of tax season for me. Why can't people prepay me? I'm obsessed with pre all of a sudden. I wish I can give you a preview of the next episode, but I haven't thought of it yet. Maybe I should pre-plan? Okay, I'll stop now. Be in your ear next time. I'm pre-obsessed. Paul Rosenblum.